Welcome to the Futurati podcast. Any member of the Futurati is somebody who believes in the power of the future. We know there's a better world ahead, and we indeed have the power to make it so. In our podcast, we talk to the best minds in the world about the most urgent problems facing mankind today, and we hope you learn as much from them as we do. I'm Thomas Fry, a professional futurist and keynote speaker.
And I'm Trent Fowler, a machine learning engineer and author. Thank you for joining us. Good evening, everyone, and thank you for listening to the Futurati podcast, where we dive into how emerging technologies will impact the world and your bank account. Since the release of Bitcoin, there has been a great deal of ink spilled by people trying to imagine the ways in which it could change the world. One such person is tonight's guest, Jack Rinaldi. I met Jack through a Bitcoin book club we're both a part of, and I was impressed with his command of the material and his ability to express himself. Like many others, Jack was originally dismissive of Bitcoin because of his background in economics, finance, and banking. But gradually, he became a true believer, and today he writes and thinks about Bitcoin's transformative potential, as well as the ways in which its vulnerabilities can be fixed. If you enjoy this interview, please subscribe to the podcast and share it with your friends, and don't forget to check out our website, futuratipodcast.com. Jack, thanks so much for coming on the show.
Thanks for having me.
Why don't you tell us a little bit about your background, your interests, and what brought you to Bitcoin?
Sure. So my name is Jack Rinaldi, and I'm a Bitcoiner from the class of 2020. I studied finance and economics in university a long time ago. I've been working in banking for the last 12 years and slowly transitioning from, the straight finance towards more delivering product. And my background in finance and economics, I had a bit of, I wasn't very humble. So I thought for a long time after I discovered Bitcoin in probably 2014 or 2015 that it was a Ponzi scheme and a scam. And every time that it crashed, I was like, yeah, it's dead for sure this time. And then eventually in 2020, I was like, you know what? Why is it still here? So I decided to look into it. And I was very quickly humbled when I finally started to understand what it was and what it does and what it can do for us. So since then, I've just dove in headfirst into the rabbit hole. And
so how do you explain how Bitcoin holds its value? Do you have a kind of a good canned explanation for that?
How it holds its value? So I think it's from the people that are, the true believers that in not necessarily the number go up, but in the other things that Bitcoin provides, its decentralization, its censorship and mutability resistance. It's switched to I think it would incentivize free market. So the people that believe in those things are the people that are going to hold it and not sell it. I think after the 2017 crash, I read that 87% of holders didn't sell. So you have a very even more limited supply than 21 million coins, right? Because most people are not selling them. The free trading supply is very limited. I think that's one. And then the other thing is I personally have transitioned from buying every dip to just doing a daily DCA. And I forget the name of the Bitcoiner on Twitter who mentioned this, but he's if there's 1 million people doing, let's say $10 a day in DCA, that's $10 million a day in demand for Bitcoin, which would really help prop up the price against all this volatility. And I think as we get more and more people understanding Bitcoin and more people doing something like that, I think it should help over time to stabilize the price and give it some kind of floor.
I think that's a sort of general point, right? In the Bitcoin standard, Saifedean Ammous notes that a lot of the driver of Bitcoin's price volatility is the inelasticity of the supply and the elasticity of the demand. And if it's true, as you say, and as I believe as well, that over time that demand will even out because more and more people will just be DCAing into it every day or at whatever interval, then the demand will become inelastic as well, and it will just kind of grow based on its fundamentals, which will deepen its liquidity pools and otherwise stabilize the price across the ecosystem, I think.
Yeah, and I think also I think a lot of the volatility that we're seeing now is because the low trading flow cuts two ways, when there's a lot of demand, that low liquidity is going to increase the price drastically. But when there's a lot of selling pressure, the price is set on the margin. So if there's only like 2 or 3 million active trading coins, like it's going to decrease the price aggressively from, let's say, like 100,000 coins being sold against that active trading Bitcoin. But I do think like as we grow from like 150 million or 200 million, however many users we have now, to 400 million, like we're going to continue to see volatility. But like the growth from, let's say, 1 billion to 1.2 billion is going to be much less volatility because the change in users is going to be a smaller percentage
of the total, a sort of stock to flow ratio for users, if you will.
Yeah, something like that.
One of the big things going on in the background right now is the Ukraine war, and rather than putting people in harm's way, the U.S. decided to turn this into more of a cyber war and to weaponize the financial system. In weaponizing the financial system by imposing different sanctions on different groups, including the oligarchs in Russia, there's a whole lot of unintended consequences that are happening as a result of this. Do you have any sense as to how this affects the kind of the acceptance and the overall role of Bitcoin in the middle of this?
I think my personal opinion, and like this might be controversial, but like I think from the perspective of the West, like what Russia is doing is like very bad. From the perspective of Russia, that might be different. From the perspective of other countries that are not in the West or not Russia, like they might see it differently. I think when people look at this situation, wherever they fall, I think the worry that they would have is like, if the U.S. controls the financial system, if they control SWIFT and they control like which bank can have access to the financial system, then like what's to say in the future, like if they do something that the U.S. doesn't like, and maybe it's not even something as bad as invading another country. Maybe it's something that they need to do domestically, and the U.S. is like, no, this is going to harm us, so you can't do it, otherwise we shut you out. Now we've seen that they're willing to go to the lengths of like shutting people off and stealing their reserves. And like not letting, like placing like significant sanctions on a country that, I mean, I'm not condoning what Russia did, but in some respect, they must be like looking out for what's best for them. So other countries are probably going to look at that and they're going to be like, okay, what's going to happen to me? So I think they're going to start questioning that and they're going to look for alternatives. So are they going to go to China? Where are they going to put their money? Are they going to put it in gold, or are they going to put it in Bitcoin?
Yeah, it's hard to know, but I tend to agree that the weaponization of the SWIFT system and foreign held dollar reserves is going to have enormous consequences and could sort of signal the beginning of the end of the dollar's hegemony, because if foreign countries see that their reserves can be weaponized in this way, I've got to believe that they're looking around for alternatives, for other places to park that money, as you said, gold or Bitcoin. And one serious consequence of that is that it will begin to reduce the network effects that the dollar enjoys. When we interviewed George Selgin, I asked him about this. Do you think Bitcoin could ever become a global reserve currency? And he didn't assign a very high probability to that, because the network effects mean that the dollar is so entrenched. It's such an important pricing mechanism. It's such an important mechanism for trade between countries. But if it's weaponized in this way, then people will begin looking for alternatives. And if they begin looking for alternatives, the network effects are no longer operative. I mean, the thing about network effects is that they're very powerful until they're not at all, until the network begins to fracture and people start looking for alternatives. And I don't know that it is Bitcoin that will move into those cracks, but I think it plausibly could be. And this is a case that was argued pretty well by Eric Yakes in an essay he published in Bitcoin Magazine, Wither Bitcoin. And he and I went back and forth on it a little bit. The basic idea is that when a dam breaks, it's not because 80% of the structure is destroyed. It's usually because a few cracks open up, which compromises its structural integrity. And then eventually you see the whole thing come crashing down. I don't know that those same dynamics will play out in the case of the dollar. But if the network effects are not as strong, then I think that weakens Selgin's case and at least makes it possible that Bitcoin could fill that gap.
Yeah, and part of it was just the imposing of sanctions against individuals, against the individual oligarchs, and it's a list that they came up with. But, if they decided that they didn't like some wealthy person in Venezuela and they imposed sanctions against him, then that opens the door for all kinds of crazy scenarios that could follow behind that. I think that's when everybody wants to hide away from the U.S. dollar and do something else.
Yeah, and I don't know that crypto has played a huge role in the Russia-Ukraine war so far, but I've got to think it's going to play a much bigger one in the next conflict because people will see this and they'll learn from it.
Yeah.
Yeah, it's like the concept of gradually then suddenly. I think I'm listening to a podcast about Ray Dalio's book Principles, and he talked about how like when he first started clerking in the late 60s, people always expect the future to be like a slightly modified version of the present, but that's rarely the case. Like things change, like it's a very complex dynamic system, and like a lot of big changes happen, big structural changes. Like he lived through like moving off the gold standard, for example.
Right.
So like, yeah, we do have network effects right now as the USD, but is that going to continue? Like I'm sure every other reserve currency throughout time also had network effects, and then something happened and it changed.
We kind of interrupted you going through your background. I was curious as to what it was about Bitcoin that humbled you. You said that you were sort of dismissive of it because of your background in economics and finance. Yeah. You thought it was a Ponzi scheme. Then you looked into it and the scale, the wool fell from your eyes and you were enlightened. So what was it about Bitcoin that created that reaction?
So I mean, I think like most people, I got into it because I saw the number continue to go up, and I was like, oh, this might be like a good place to park like a few percent of my wealth, and like just kind of like a long bet to see like maybe if it goes up 5x, I've done a good trade. But then like once you have skin in the game, you start looking into it, and then like I remember going through a lot of Preston Fish podcasts and a lot of what Bitcoin did. I think, and then I started reading books, and I think the one that really like just I would say like orange pilled me or had like the light bulb moment was when I read Jeff Booth's book,
Right.
The Price of Tomorrow. And when I realized like I'd never thought of that argument about how technology was super deflationary, but this system that we live in cannot have deflation by its nature. Any deflation, like right now we're seeing like a couple % deflation and everybody's freaking out and everything's like falling apart. When I realized that, I was like, these two systems are like fundamentally incompatible, like human ingenuity and technology versus a fiat fractionally reserved debt-based system. Like it will break, and it will continue to break every time we try it because technology is not going to stop. So yeah, like when I saw that, I realized like Bitcoin or something like it was our only choice in order to live within like just how our society and how nature works.
My next question sort of dovetails pretty nicely with this. When we were setting up this interview, you said that you wanted to work towards a vision of a world on a Bitcoin standard where everyone shares in the abundance created by technology while also living sustainably. So can you tell us a little bit about your vision for that world?
Sure. So like what I see is like, I think tech is going to continue to increase it's going to continue to increase the amount that we can produce with a given amount of inputs. So just what we do as humans, we're ingenious and we continue to do that. The problem is that right now, a lot of those improvements like are not shared amongst everyone. They just kind of accumulate to the asset owners, especially the inflation. So on a Bitcoin standard, what I see, like when you fix the supply, the improvement in the amount that we can produce, that directly translates into a lower price of everything. And there'll continue to be pressure for the prices to drop over time, which means that we all benefit from the tech-driven deflation. But also, like, imagine if your currency is appreciating in value at whatever, like, the rate of tech innovation is. Let's say it's 5%. Like, you're probably still going to go out and buy stuff that you absolutely need. You're going to buy like the food that you need to eat. And like, if your TV is broken, you'll go buy a new TV. But like, if you don't absolutely need something, you're not going to go and buy it. Whereas today, like you're incentivized to consume. So the way that I kind of see the difference between those two systems is right now, like you're just buying stuff just because you know it's going to be more expensive in the future. Whereas on the new system, you're going to wait and you're going to buy it when you absolutely need it. So overall consumption would go down, which means that we're going to be spending less energy on producing things that we don't need and less resources. So I think it's going to be just a more sustainable system in terms of the scarce resources of our planet. Like right now we consume more than the planet can regenerate by like the end of July every year, which obviously we can't sustain for a long period of time.
So when we get into this new type of economy, there are lots of forces in the current banking system that are trying to make sure that any of the cryptocurrencies do not succeed. They want to make sure that Bitcoin is going to fail. And it seems like there's been a whole lot of effort going into trying to kind of change people's thinking. And you have the Warren Buffetts of the world and people who just say there's no way in hell that's going to survive. So what type of resilience is built into Bitcoin to kind of to circumvent that type of attack?
I mean, I think for people that have not done their research, like I was very early on, I think that attack can work very well. Like that kind of propaganda can work well, and like you just dismiss it because you haven't understood it. But I think like I always say to people, like the thing that I'm most bullish on in Bitcoin is not necessarily Bitcoin itself, it's Bitcoiners, because as myself and as people that I know that have understood Bitcoin, I've seen the change that happens in their lives and how they like live their life before and after Bitcoin. And like once you discover it, like you can't unsee it, and you have this like need to go and tell everyone that you care about Bitcoin. And it's like you need to understand this. And I've done that in my own life. Like I've probably orange pilled like upwards of 10 people and working on 5 more at the moment. And I think it's just like one of those things. It's like people liken it to a religion, but like it is spreading virally. You know, like every person that gets converted eventually goes on and tells their friends and their family. And then it just starts to grow in that way. So I think like I'm not super concerned about people like dismissing it with like incomplete, like the uninformed critics. I'm actually more concerned about the like Wall Streetization of Bitcoin. I think Ben Hunt has an article about this. He calls it Bitcoin trademark. Because there, like, you're not using a negative to kind of drive it down because people don't respond well to negatives. You're using a positive, like you're giving people like tax advantage status to hold Bitcoin TM in their like tax advantage account, but it's not really Bitcoin. It's a derivative of Bitcoin, and there's an unlimited quantity of those, and they can be controlled by the system.
That's interesting. I saw him using that the other day, and I didn't really get into it all that much, but I know his sense of humor, and I've read a lot of his other things, so I figured it was something kind of along those lines. What's the basic problem, if you could expand on that a little bit? It's like the Wall Streetification of Bitcoin. What is it, and why is that so bad?
So the basic problem is like, while Bitcoin is limited to 21 million coins, derivatives built on top of Bitcoin by Wall Street are not limited. So like they could issue ETFs to track Bitcoin. They could issue futures and options, and those already exist that are against Bitcoin, and they're cash settled, not physically settled. So you could issue like trillions of notional worth of coins on top of that. But you're not actually holding real Bitcoin. And there are some theories out there that that's what's already happening. Like this crash was a leverage driven crash, and people say the same thing happened to gold in the 70s. And like once, if you're not holding the keys yourself, you know, like there's a saying in Bitcoin, not your keys, not your Bitcoin. If you're holding like not even your coin on an exchange, you're holding something on like a Wall Street product, or even on an exchange. You know, like an exchange can also fractionally reserve your Bitcoin. So you think you have Bitcoin, but you only have like claim to 1/10 of a Bitcoin that the exchange actually has. So those are all like very big concerns for me, that like if people don't understand the need to like take custody, or if like a lot of my friends that they're like, yeah, I understand what you're saying, but like I can hold it in my tax-free account, and like GBTC has a 30% discount. I'm like, yeah, but like, are you in it for the money, or are you in it to try to change the world? And I think it's convincing people of the latter. That's what's important to change that.
And the big problem there is the fact that we're essentially recreating the existing financial system with its well-known and well-documented problems on this new digital asset that was supposed to be an alternative. Is that right?
Exactly.
Okay.
Yeah.
How concerned are you about coming regulations imposed on the crypto world, and where are those most likely to come from first?
I think, I mean, I can't say that it's not going to have any effect. You know, like if, let's say, the regulations are to ban it, which I don't think they will be because they haven't like shown that yet. But if it was like to try to ban it, like obviously it would have an impact on the price. But everywhere that has banned it so far, the use has actually increased rather than decreased, because like when a government says you shouldn't do this, like human nature is gonna be like, okay, now I want to know what this is. Why are they trying to stop me from using it? But I think the regulations are going to be more towards the Bitcoin TM, like they're going to make it easier to use, but within like the existing guardrails of the system. So like you have to go through KYC. You can't like, they're going to make it very difficult for you to self-host it. So for example, in Canada, I think there's a recent thing where like you can't send more than $1,000 off of an exchange without telling them who the wallet that it's going to belongs to. And it's like, it's just such a ridiculous rule. Like where else does that exist?
Yeah, I was listening to the Bankless podcast the other day, and they were talking about some of this. I think similar rules exist for NFTs and for a couple of other digital assets as well. It's really Orwellian stuff.
So is it more likely that the European Union would actually impose the first regulations then?
It seems to be that they're the closest. I think the U.S. is still in the period of gathering information, and then they're going to probably deliberate and figure out what to do with it. I know Loomis is trying to pass a bill, but I don't know that they're going to get enough support for that. But the European Union seems to be like, I don't know, just forging ahead. Everyone seems to be very against being like self-sovereign.
Yeah, Europeans do have that reputation, or at least their governments do. I was curious about something you said earlier, that you've noticed a change in people's lives as they've gotten more into Bitcoin. I buy the basic thesis that the properties of a money importantly influence the members of a civilization. And I buy the thesis that a deflating money supply incentivizes more low time preference behavior. But I'm curious as to what concrete actions people have taken before and after Bitcoin, such that you noticed there was a difference in them. How did they change?
So I'll give you an example from myself and one of my close friends. Like before Bitcoin, like we were both like finance professionals, and like we went to work because like it was decent pay, and we had somewhat interesting opportunities. But like, I guess like speaking from my own experience, it was kind of like, you're kind of like a zombie, like going through every day, and there's not much to be excited about, like maybe you get a promotion, but like I recently did an analysis, and like if you account for real inflation, I've actually, no matter how many promotions I've gotten in the last bunch of years, like I've actually fallen behind. So like deep down, you kind of see that like you're running really hard just to stay in place. And then like when I discovered Bitcoin, like first of all, it was like super interesting. So like it consumed all of my free time learning about it. But then I also like all of a sudden had hope for the future, that we could change the system, we could get better. And then I also was like, okay, like what can I do to help? What can I do to help this system be successful? Because the probability of this succeeding against all of these odds is super low. So it's going to take all of our concerted efforts to bring this about. And then like I've always wanted to start my own business and kind of break free from the corporate reins, but I never really took the action. And then after I discovered Bitcoin, maybe like 6 months later, like I'm starting to like get involved in startups. I'm starting to figure out like, how am I going to launch my startup? What am I going to do? What am I going to work on? How am I going to do it? Like, what are the concrete steps that are going to happen? Like I recently, like in the last 7 months, I started learning about product management, which is how startups build product. And I'll tell you, it's way better than how banks build product. But yeah, it just, I don't know, like it gets this fire going in you, and you like this passion that was non-existent before it. So like, yeah, I don't know, it's very exciting to be optimistic about the future.
What are you doing to try to bring about a Bitcoin standard other than just think about it and talk to people about it? Is there anything else you're doing that I guess you can divulge?
So I'm currently trying to get into Bitcoin companies as a product manager. And from there, like, I think we are like very early, like in a new product, like there's phases of adoption. Mm-hmm. And between like the early adopters and like the early majority, there's this thing called like a chasm. I think in one of the books, the startup books, they talk about this chasm.
Yeah.
Where like early adopters, like they don't really care if things are clunky and difficult to use, because like they want to use it, like setting up a node or doing like the whole like wallet and key management. Like that's fine that it's complicated because you want to use it. But most people are not going to want to do things that are that complicated. Like my own brother, when I talked to him about like doing all these things, he's like, yeah, but like I don't have time. It's super complicated, blah, blah, blah. I'll just keep it on the exchange. So like what I really want to do is like I want to identify these frictions and help Bitcoin companies solve them, help them kind of like make it like almost like an Apple product that easy to use.
Do you need a dynamic and knowledgeable speaker for an event? Thomas Fry and me, Trent Fowler, are both seasoned keynote speakers, able to converse on a wide array of topics to audiences of all sizes and skill levels. Go to the contact page at futuratiepodcast.com to book Thomas or myself today, and let us apply our years of experience in public speaking to make your event a smashing success. Yeah, this is one of the hobby horses Thomas is actually always writing, the usability of the applications and the technology and stuff like that. I am not super involved in it, but the impression I get is that the usability has improved rather a lot. And maybe that's just because the centralized exchanges are really slick. But where would you come down on that? Do you think that we've made a lot of progress and grandma could plausibly start onboarding and live a Bitcoin life, or are we still kind of a long way from that?
I think we've made a lot of progress. I mean, like, granted, I've only been in the space like really intensely for 2 years, and before that, it was just kind of on the outskirts. But I have read about like what it was like before and how hard it was to manage your keys and how easy it was to lose them, and how many people did. Whereas now, like, I don't consider myself like super techie, although I am learning. Like, I didn't have too much trouble setting it up, and like, if you really want to, today you could do it. I think if you rewind like 5 or more years, it was much more difficult to do that. And there was also a lot less information. Like, there's so much content out there right now.
There is, yeah.
And I think it'll continue to improve. Like, Bitcoin is attracting like smart, passionate, talented people away from like degenerate existing fiat companies, and they're coming over here. Like, they're coming over here to build something that they believe in. And when you believe in something, like, you're gonna stick through it. Like, I've been studying founders a lot through this podcast that I really like, and all of them are always optimistic, because without that, you're never gonna go through all of the challenges that you face, and you're gonna give up.
You'll have to listen to the episode of the Futurati podcast that drops this week. It's with Dr. Gina Gorlin, and she studies founders and people who are incredibly ambitious, but who actually act on that ambition and achieve their dreams. And she's a clinical psychologist who studies this professionally. So she's got just incredible insight on it. And it was a fantastic interview. I wanted to ask you what remains to be done for increasing the usability in the space. So to get to that point where the average Bitcoin app is essentially like an Apple product, and that's how good it is, what's that distance look like?
Well, I can give you a good example myself. Earlier today, we were trying to transfer some money, some crypto between 2 wallets, and my assistant and I, we spent well over 2 hours trying to make this transaction happen, and they threw up so much security. I'm convinced that one wallet is going to die. It'll be death by security, because there's just they put so many layers of things, and checking and double checking and quadruple checking, that it just makes it almost impossible. And that's the type of thing that, when you think about using cash to make a transaction, you just hand a $20 bill or a $50 bill or whatever you have, and then the other person makes change. That's real understandable. It's physical. It's intuitive. It's something you can look at and understand real easy. When everything is digital, then you have you're dealing with things that are in space, and so you just don't have a good sense or a good feel. You can't touch it. You can't taste it. You can't smell it. You just you're not seeing what you can buy with it. not right away anyway. And so I actually think it's really difficult for young kids to understand money today, never having dealt with actual cash.
Well, so to add to that, so I think in order to get to a point where it's that easy, a few things that I would call out. So to your point about cash, there's actually a company called CoinKite that has a Sats card, I think they call it, which literally is like Bitcoin preloaded on a card, and there's like multiple uses, and you use it like physical cash. So I thought that was a pretty cool innovation. Like you have Bitcoin, but you also can use it as cash. But to make it like super easy to use, like I want to see something like Apple Wallet, where you could just like have Lightning connected to your phone and you just tap and you pay. And then like that part of it is super easy. Like obviously you still need to have like the key management of your UTXOs on the blockchain, but then you could have like companies like Unchained Capital that does the multi-sig collaborative custody with you. Like they're almost like a custodian or a bank, that's helping you do that. So any really way that you can like make it abstract away the difficulty and make it seamless for a user, kind of like what Apple does, like you don't have to think about it. It's intuitive. Like you don't need an instruction manual to use an iPhone, whereas you do need an instruction manual right now to like set up a node and manage your wallet and all that. If we can get to something like that, I think that would like really help drive adoption.
There's a new Abra card that just came out. It's run on the American Express network, and it's intended to help transfer money between different cryptocurrencies and the U.S. dollar. So maybe that's a good step in the right direction.
Yeah, I think like all these innovations, like we'll see which ones succeed, which ones die, but all of them are going to be important lessons. That's how we move forward.
What are some companies that are innovating in the space that you're really excited about?
I really like, so I mentioned Unchained Capital and CoinKite. I really like those two. Another one that I would add is Block from Jack Dorsey. I know there was some controversy around like their new hardware wallet was going to use, I think, fingerprints or something like that. And people are like, why would you use fingerprints? Like fingerprints never change. They're so easy to delete. It's better. And we'll see which ones do well. But I do like, I guess, options that abstract away difficulty for people that don't want to get into the nitty gritty.
So in order to build this world in which Bitcoin is very easy to use and we all enjoy the benefits of an ultra hard currency that we control and incentivizes low time preference behavior, we will have to address some of Bitcoin's vulnerabilities. And this is a point that you've made in a number of places. So what do you consider Bitcoin's vulnerabilities?
So I think I mentioned the biggest one, which is the Bitcoin trademark, like where it's essentially seized by the existing system and it doesn't work as intended. The second biggest one, I think, like was right in the white paper, and Joe Kelly is a good, very well-informed critic, in my opinion, that talks about this on Twitter. I think we're past the point where like essentially anyone but a government can attack Bitcoin. But like, let's say the US government really wanted to go after it. Like Joe Kelly has laid out how they could do something like that with their vast resources at their disposal. What I'm not sure that he like is fully thought through, because like, again, these are like very complex systems and it's hard to anticipate. Like let's say the government attacks it. It's really hard to anticipate what's the reaction going to be of all the Bitcoiners. How are they going to defend against that attack? So I do think like there's a possibility they could try to do like a 51% attack against Bitcoin, but I'm not sure what the outcome of said attack will be. And if they try it and they fail, like I think that's game over for them. Like the fact that Bitcoin listed the US government, like that would be like the biggest marketing for Bitcoin ever. So like until they know that they can succeed and there's no way that we can defend, like I don't think they should try something like that.
One thing I was discussing with my brother over the weekend actually was the possibility of governments not attacking Bitcoin directly through something like a 51% attack, but trying to close the on-ramps or the off-ramps into crypto by regulating them so much that it's prohibitively difficult to use. you could imagine this being layers and layers of red tape around KYC or AML, or just outright freezing what's on the exchanges. And this would be a drastic move. But number one, do you think anything like that is plausible? And how would the Bitcoin network respond to something like that?
I mean, I think it's definitely plausible. And if we get to the point where it's like Bitcoin or them, like they might choose that option. But I think like they can't stop like you and I from transacting peer to peer, right? Like they can stop us from going through a centralized entity, but they can't stop us transacting peer to peer. So I think like the answer to your question really depends on like how many people we have onboarded by then.
Right.
Because if we can get like a circular economy with like a significant percentage of the population on there, I think that gives us two defenses. One of them is it's going to be really unpopular for the government to attempt to move like that if, let's say, like 50% of the population is onboarded onto Bitcoin. Secondly, even if they try it, even though it is unpopular, you can just transact peer-to-peer and they can't stop you, right? And that just like further weakens the government if they try it. And then like in some countries, I think in Nigeria and China, like they've banned it, but people continue to transact peer-to-peer because like good luck trying to track down millions of people.
Well, in virtually every country, there's an underground economy, and transactions take place in spite of the government watching, and they do it through lots of novel techniques, and sometimes it's through gift cards, and sometimes it's through miles on airline miles and other. Anything of any value, and just trying to ban cryptocurrency just changes things to a different kind of underground economy. It's kind of the way I look at it.
Yeah, necessity is the mother of invention, or life finds a way.
Yeah, one of my favorite examples of this is the incredibly detailed and complex economies that develop in prisons and the sorts of things they use for currency. I mean, everybody knows about cigarettes. Everybody knows about, a couple of other tradable commodities, but I've also heard of them using Blockbuster gift cards as like currency inside of prisons. That a way of like loading the points somehow externally and bringing it back. And it was crazy. It was an episode of Econ Talk with Russ Roberts, if you're familiar with him, where he was discussing a book that had been written about this. And I always felt like economics textbooks, instead of starting with island examples, I mean, you're familiar with this, like you're a guy on an island and you start thinking about capital goods and how to increase your production and how that impacts consumption. This is all economics books kind of proceed this way. I thought, like, what if instead they use some of these examples from prisons of the ways in which people develop an economy, and they buy and sell goods and services, and they store their value over time, and they do all the things we do out here, but within their constraints. It's kind of remarkable how resilient that pattern of behavior is. And I tend to agree with you that it would take a campaign of unprecedented coordination, brutality, and effectiveness to really kill Bitcoin, I think. I just don't think the governments have it. I think they could make it much, much more difficult to transact in. They could set it back a number of years, but killing it outright, it doesn't seem very plausible to me.
It also seems like they're very wary of them killing a real important technology along the way.
Right.
I mean, just the spin-offs that have come from Bitcoin have just, it's sparked entire new industries. So, it's really given rise to blockchain technology, which is being used in so many different ways. Even though blockchain existed in different forms before Bitcoin, it really didn't. Nobody was paying attention to it until Bitcoin started moving up the value chain. So I think that's something that they're worried about as well. And the way I look at it is, if they manage to somehow kill the entire crypto industry, that we would somehow fail forward, and all of this technology gets revived in some other way. And so I really don't think you can unring the bell here.
Yeah, and to add to that, like if they do try to, let's say the U.S. tries to kill it, like what message are they sending to their population and to the world? Like we no longer believe in free markets and innovation. Like we no longer believe in people having the right to choose what to do with their money. Like, that's not a good message, like that's not a place that you want to be if you're going to be like a liberal democracy with a free market. And then like, unless the entire world coordinates to ban it simultaneously, like somebody else is going to be like, you know what, like, screw you. Like, you're going to ban it. I'm going to adopt this because I can see how many smart, passionate people with capital want to build on this. And I'm going to attract that talent.
And I think it also ignores the fact that other governments have an incentive to be looking into this technology because of the reasons we alluded to earlier, namely the weaponization of the SWIFT system and foreign held reserves of dollars.
Right.
I've got to think governments are going to be thinking about that. And, if Kenya is the only government in the world that recognizes Bitcoin, that's not really a big enough market to do anything. But if it's, a number of different countries and it's the United States that's banned crypto or otherwise moved against it, and yet you can still transact in lots of other places and there's exchanges that are open, it's one of those things that's going to be really hard to stomp into the ground, I think.
Yeah. And it's funny that we're even having this conversation because like the government should be representing us. It should be us. And like, we've got like, I saw something like the government should be afraid of us, not the other way around, Yeah. Right. But we're always afraid of how is the government going to screw us? Like, how have we even gotten to this? This is what always blows my mind.
Yeah. We share that.
That's a great point.
One thing I wanted to ask you about is this list of Bitcoin values that you wrote about on Twitter. So you wrote about 8 or 10, I think, values that are sort of implicit in the design of Bitcoin and the way in which the network has grown and unfolded and been developed. And then also principles which allow for the achievement of those values. So could you walk us through that list of values and what it is about Bitcoin that kind of embodies each one, or as many as you can recall? Sure.
So I'll quickly list them. So value 1 is individual freedom. And then we have fairness, sustainability, transparency, resilience, security, privacy, personal accountability, social responsibility, and optimism. So like going one by one, so like individual freedom, I think Bitcoin embodies this, that in that there is nobody that can stop you from using Bitcoin peer-to-peer, right? Like we should have freedom of choice over our own lives. As long as that freedom doesn't like impinge on somebody else. So that doesn't mean like we should be able to end somebody else's life, but we should be able to choose what we do with our own. Fairness, I think a lot of people these days seem to think that fairness means equality of outcomes. I define fairness as equality of opportunity because not everyone's going to put the same effort into something. Not everyone's going to have like the same skill set or the same innate natural talent. So I personally don't think that equality of outcome is fair. I think if you present everyone with an equal opportunity, which Bitcoin does, and it has done from the beginning, I think that's the most fair system that we could come up with. I think we've talked about sustainability in terms of how Bitcoin can help us live within our planet's natural means. Transparency, like I think the transparency and the privacy, Troy actually pointed out that those two are kind of fighting each other, right?
Right.
So transparency, I talk about like the blockchain is transparent, so you can see exactly what's happening and that the rules are being abided by. I think people should have like the right to personal privacy, but I think institutions, especially like governments and corporations, should be as transparent as possible. Like that's my personal belief. I think probably a lot of people in Bitcoin share that.
Right.
Resilience, I think that value is like we need systems that like can last thousands of years, not something that we keep switching from fiat currency to fiat currency and like world power to world power, and like in between there's like after Rome fell, you had like the Dark Ages for 400 years in Europe. I don't like a system where like you get like this period of boom and everything is great, and then you have like this huge drop after that because right. like you were living outside of your means. So like I like something that could last. Otherwise, I think we wipe ourselves out as a species over time.
Yeah, I just did an interview with Samo Buria, and his whole thing is thinking about immortal societies. So the tagline on his website is, "There's never been an immortal human society, and I work on why." And I think that it's really interesting that you've also kind of converged there as well. You want some kind of rails undergirding the social technology stack, which persist indefinitely and have within them the means to kind of just keep going forever as long as they're human beings. I think that would foster long-term thinking that would be unlike anything that's come before.
Yeah, we've
Exactly.
we've never had self-perpetuating technology in the past.
Yeah. Or even just, not just self-perpetuating technology, although that's an important piece of it, but just something that can allow a human society to continue indefinitely as well, like a monetary system that with properties that are known in advance and with an issuance schedule that's known in advance, such that no central power can debase it suddenly or decide that they want to print a bunch of dollars in order to fund a pet project. Like, what you're getting into. And I think that once that becomes pervasive, it really changes the way people think about the present and the future and how they invest and the sorts of actions that they take, how they game everything out.
So Jack, should we be teaching Bitcoin in grade school?
That's a good question.
Orange pill and the toddlers.
I think we should be explaining to them what it is and encouraging them to do their own research like Bitcoiners do. I am optimistic that when we move into a generation that's like, I guess in 6 years, in 6 years, you won't have like anyone under 18 that hasn't lived in a world that didn't have Bitcoin. So like the more young people that have exposure to it as they grow up with it around, I think to them it'll be, especially as it gets easier to use, it'll be just kind of like, yeah, of course, like what's wrong with digital money? Like a lot of people are like, I can't touch it, I can't feel it. But the younger generations, and you're like, yeah, this is natural. This is how things are.
Hello, this is Trent Fowler, co-host of the Futurati podcast. One of the most common pieces of marketing advice I've come across is to know your audience and give them what they want. One difficulty in podcasting is that it's actually pretty hard to do this. None of the major platforms give us any way to reach out to you, our listeners, to find out what you enjoy about the Futurati podcast and what you'd like to see done differently. So we've decided to record this commercial and ask you directly to reach out to us. Head over to futuratipodcast.com, go to the contact page, and drop us a line. Tell us about your favorite and least favorite episodes, what you'd like to see us cover in the future, and anything else you want us to know. We produce this show for you, and we want your advice so we can make it even better.
The reason I ask you that is because there's been a lot of criticism of our education system on never teaching people how to balance their own check account, how to manage their own money. It almost seems like they've gone out of their way to keep us purposely ignorant, so that there's a lot of suckers out there on some level, and so the education component of this seems like long overdue on so many levels.
Yeah, I mean, I think like education is a whole nother rabbit hole that I could talk about hours on, but I'll summarize it by, I don't think its point is to make you think. I think its point is to make you comply and just believe what you're told. At least that was my experience through all of my education.
Yeah.
And it was not until I discovered Bitcoin that I was like, you know what, like I want to start thinking for myself.
Bitcoin is thought. That's another Bitcoin is freedom. I wanted to follow up on the privacy transparency thing that occurred to me as well. And I had a question here I had a note to ask you about that. You alluded to the fact that Troy pointed that out in your thread. And I think it's true that institutions in many cases should be expected to be transparent in a way that individuals aren't. But I don't know that there's actually as much of a problem there as it seems at first, because you could be interacting with an address, which is anonymous or pseudonymous on the blockchain, and whose transaction history is laid bare for anyone to inspect without necessarily being able to tie that address to me. So I, as a human being, would still have privacy, but this address that I control would have transparency, and that would allow you to trust it, right? Because you could look back over its transaction history and see that it's always paid its bills. You can see that it's always done what it said it would do and followed up and squared away in the way that it was supposed to, without ever knowing that I'm the one that's behind it. So you could still have the privacy, but the transactions would be transparent, and that would foster a certain amount of trust in that. Do you see any problem with that account? Do I have that right or not?
I agree with that. I agree with that completely. As long as, I guess, the government doesn't force KYC, which removes your ability to have privacy on the blockchain itself. But I think like my whole point about transparency was off blockchain, because like not everything is going to be on a blockchain. Like the corporations are going to be doing stuff off of it. And I think that should be transparent as much as possible.
Are you enjoying this episode of the Futurati podcast? If so, please like it. Give the show a 5-star rating on Apple Podcast, Spotify, or wherever you get your podcasts, and share it with your friends. By far, the best way to help us grow is to spread the word on social media, which will expose our content to more people and help us continue to bring you interviews with world-leading experts in AI, quantum computing, cryptocurrencies, and so much more. Thank you in advance. There are certain obvious use cases like the disbursement of charitably donated funds, for example, or things that a government might do where you would want an auditable ledger and you would want names attached to it. But otherwise, I don't see that there's as much transparency there. I think it's just because we tend to tie what you do with your real identity in a way that can be sundered when you're talking about a blockchain because the addresses are pseudonymous. And so you could have that transparency I was describing while not being able to tie it to a person. But you're right, a lot of that goes out the window as soon as you start talking about KYC and AML requirements, which I suspect will get more onerous before not. But who knows? I mean, the whole ecosystem is on fire right now. So we may be seeing some big changes.
I'm hopeful for the future.
Well, we usually like to end on that note. So why don't you tell us a little bit about what makes you hopeful for the future? Why don't you just walk us through the case for optimism?
So my case for optimism is the people that I have met in the Bitcoin space, like yourself included, the people in our book club, the people that I've met on Twitter, everyone that's reached out to me. I just got involved in this Bitcoin PM community. Right. My friends that I've met as Bitcoiners, like everyone is just so passionate and so dedicated and like wants to, like genuinely, in my opinion, genuinely wants to help build a better world and help everyone in that planet, not just themselves. And I know a lot of the skeptics and the critics are going to be like, no, you just care about money. But I generally do not think that is true. Like, obviously, there's going to be people that think that way. But I don't think those people really understood Bitcoin and why it exists.
Right.
So I'm optimistic on Bitcoiners, and like I'm so optimistic on Bitcoiners that even if Bitcoin fails, like I will be happy to have had this community, and I think that together we can do something great in the future.
So there's a lot of criticism about the volatility of Bitcoin. Do you see it actually stabilizing and becoming more of the standard of stability versus some other national currency like the U.S. dollar?
Yeah, I think over time, if it succeeds and it onboards a significant portion of the world and people start using it as currency more and more than other currencies, I think it will stabilize. But at that point, you're not really like stability is not really going to be a thing because you're not going to be pricing stuff in US dollars. It'll just be priced in Bitcoin. And the only instability in the price would come from like just natural booms and busts, which I know like the current institutions don't like, but that's just the way of the universe, like it happens and it's good to let it work itself out.
I often wonder if anybody has attempted to learn the volatility of gold as it was being monetized. This is a point that I brought up in a private conversation recently because I was having almost this exact same discussion. Money famously goes through a set of stages on its way to, well, a good goes through a set of stages on its way to becoming a money. At first it's a collectible, and then it's a store of value, then it's a medium of exchange, and then it's a unit of account. And in those early stages, as we've said, the price can just go bonkers, right? So I just wonder how long it took gold's price to kind of settle. Like in the first 200 years of gold being used as a commodity money, was there variable demand for it? Was it pretty stable kind of from the beginning? I don't know that is a question that can really be answered, but it wouldn't surprise me to learn that it was fairly volatile as well, and it took a while for that to even out as the stock to flow ratio dropped over time or rose. Is it high stock to flow?
Yeah.
Yeah, you want high stock to flow, right? So as it rose over time.
I wouldn't be surprised either, but like even if we look at like gold had already been monetized, but if we look at like Weimar Germany, there's that famous graph where you see like the volatility of gold priced in marks over the like 6-year period of the mark failing, and like there was like multiple 50+% drawdowns just like with Bitcoin, and it's I think it's just like human nature, like when you don't understand something, you're gonna panic and you're gonna paper hand it and you're going to sell a real asset. Like, I think a lot of people during that time, like I was reading about it, it's like they were like, oh my God, I'm getting rich. I'm a millionaire now. But they weren't really millionaires. It was hyperinflation. And like the people that did the best were the people that borrowed as much money as possible and bought all the real assets.
Well, interesting. I mean, it's probably a good time to note that this is not financial advice, but
No.
I've noticed the same pattern.
Do
as
not
well.
do that.
I'm going to take out another mortgage to buy this dip.
Do not sell your firstborn to buy Bitcoin.
For the record, I do not use leverage to buy my Bitcoin. I do not want to get wiped out. I'm not that risk tolerant.
Yeah.
Do you have any final thoughts that you want to leave the Futurati podcast audience?
I think my final message will be just like, stay optimistic and hopeful. Like, I know the future looks bleak in these times, but I think that's been the case over the most of human history. And like, I think Elon Musk, whatever people might think of him, I think it's his quote. He's like, I'd rather be optimistic and wrong than pessimistic and right. And I like to approach my life that way.
Well, I think that is a fantastic note to end on. Jack, thanks so much.
Thanks, guys.
Yeah. Thanks, Jack.